Verizon announced today that all of their employees, other than the top management, will receive 50 shares of restricted stock. This amounts to about $2,500 per employee. Employees will further share in the company's success, Verizon said in a release. We're only 1 year in, and the president is just getting started.
That was White House Press Secretary Sarah Huckabee Sanders detailing Verizon's plans to reward employees as a result of President Trump's tax plan. Verizon, of course, not the only company with a big announcement yesterday. Disney announced employee bonuses, and J.P. Chase raised wages. My next guest was among the first to announce plans to give money back to employees. Bank of America Chairman and CEO Brian Moynihan is with me right now. Brian, great to see you.
Good morning.
Thanks.
It's a wonderful day here.
It really is. And I know that you announced employees getting $1,000 bonus, citing the tax bill.
Yeah, it was a broader package, but when the tax bill came out, we agreed, we believe we had to share success with our teammates. It's one of our core principles. So for everybody earned under $150,000 in the U.S., we gave them a $1,000 bonus that they got in their paychecks by year end. But it was on the backs of, we'd moved to $15 an hour last year this time as a starting wage. An employee who's worked for our company from 2010 to now, who's in the bracket we're talking about, has had an average wage increase of 5% per year.
Wow.
And so, it's a constant war for talent out there at all levels of our company.
So how long does this go on? I mean, one of your colleagues in the business said to me, people are looking at this as if it's an overnight success. The truth is it's going to be a lot longer and sustainable than people think. How do you see it?
Sure. So we were on a panel yesterday together, but if you think about it, tax reform is a month old. So, we all had our one-time adjustments we had to make in our year-end financial statements. So we had some programs, ours the employee program, and then the question is what we do. We're increasing our investment, and we told our investors on our earnings call that we consider increasing some of our investments, speeding up the pace of stuff we're doing, more branches in new cities we weren't in, which have about 10 employees per branch, so that'd be several hundred. There's all those things, and like companies around the world, but it'll take a little while for people to catch up to, because it's brand new, and so they're adjusting their business plans and their spending plans. But you're hearing across the board an incremental aggressiveness, an incremental focus on investing stuff that may have a little longer payback, with an equal balance that we're going to give investments extra earnings and dividends and stock buybacks too, which isn't bad either, because that's going to go back in the economy, and the investor that's going to have to put it to work, which some company that needs more capital will take it and put it to work.
Yeah, let's talk about more capital and really the regulations that you've been faced with for the last 10 years, which are beginning to get rolled back. So the Trump administration has announced a pretty good rollback in regulations, but it hasn't even impacted the banks yet. Isn't that right?
Well, if you think about the regulations for banking, we needed to get the situation right. So we had a ton of regulations, and the expectation would be they would swing past the point of the middle. And so if you think about what we need to do going forward, it was, the people running the agencies and the regulatory process, those people are now in place, and Chairman Powell was approved yesterday. That was important. The second was to stop new regulations that were inconsistent, adding on, piling on, over the right word you might use, because we'd fixed everything, frankly. We were kind of done. And even Governor Trujillo, who did a good job of bringing the regulation forward, declared it was kind of over, but we had to stop the momentum. And then the third thing was Secretary Mnuchin, with Craig Phillips and team in Treasury, working with the industry and people who like the industry and people who don't like the industry, came up with a roadmap to appropriately rebalance the regulation. As one of the largest underwriters of the FDIC fund with my other banks, we put in the money. We have the highest interest in the safest and soundest banking industry, because anytime a bank fails, the industry puts up the money ultimately, and we put up about a 14–15% share of that. So I have a higher interest than a lot of other people to make sure this is a safe and sound industry.
Right. What I was getting at is it seems like there's a long runway. Yep. I mean, you haven't even felt the impact yet. That's going to be a big deal for Bank of America and the entire industry.
I think it'll take time, and they got to do it right, and it's got to be carefully done and done with the right cost-benefit analysis and stuff, so that frankly, we can't have it keep changing back and forth. And so as we fix Volcker or something like that, it's got to have a stick to the ribs to it. It's got to have an integrity to it that does the purpose that was intended, to stop proprietary trading.
Sure.
Removes some of the difficulties in compliance, but sticks to it so somebody else doesn't have a better idea in 2 years, because the systems requirements and the fixes for this, we spent over $1 billion on a resolution plan. I don't want that to have to be redone. Yeah. That's just money that's really going to consultants and teammates and other people and systems, but it really doesn't do anything for a customer.
Well, you need certainty. I get that, to plan. Characterize the consumer. Your business has been going very well. Growth, obviously, at B of A. Yeah. Can you tell us how the consumer looks in terms of lending, spending right now?
Sure. So if you start from the broad thing of what happened last year, so from 15 to 16, all the spending in the consumers, which is about $2.25 trillion at Bank of America, grew about 3%. 16 to 17, that same spending, whether it's checks or debit, credit cards, money out of the ATM, grew at 6%. So twice the rate across 2.6 trillion last year. And in January, it's off to a good start again. The consumers have been spending. It's balanced. It's a little more driven at the increment by experiences and things as opposed to things. They're doing stuff as opposed to buying stuff.
I see.
But the money.
So they're going out to dinner and they're spending money
whatever.
there.
It's a vacation.
Sure.
And as wages continue to rise and as wealth continues to build in the market, you're going to see that as one of the attributes of that. So that's very constructive. On the lending side, we're a prime lender. The credit statistics are very strong. The availability of credit is very strong. Small business, we've had record successive quarters of production, meaning of new loans, and so that business has done well. And then the next level up we call business banking, also doing well. So the activity is high, and I think as you get the regulatory certainty for those companies, our clients, and the tax benefits that they'll get, you'll see them be more aggressive. So we'll see that SME type of, as people like to call it over here, we call it small business, but those people will grow also.
So do you believe that this market then is trading appropriately? I mean, it sounds really good. The 4% growth expectations, the business, of course, at your bank. But people are worried about complacency in terms of these markets. You're a markets guy. What do you think about this incredible performance?
Well, I have a lot of experts, and we have Candace Browning Plattner research team, which is one of the best in the business, and they have the S&P growing for the year. About to say new target they put out because of all the enthusiasm, maybe 3,000 or something like that. So it's all constructive, but the reality is the best stock to invest is Bank of America, and that's where my money is. But if you really think about it, the market's reflecting the underlying earnings power of the companies, and there are some excesses, there always will be, but broadly across the board, that's what's driving the valuations, and companies are earning well, the economies are growing, and the world's economies are growing faster.
Yeah, okay, we will leave it there. Brian, it's great to see you this morning.
Thank you.
Thank you so much for joining us. Brian Moynihan is the Chairman and CEO of Bank of America.